Okay, so I know a lot of you are gonna think that the title of this video is clickbait. A lot of you will be like,
Hey Andy, I thought you were a long-term investor. What the hell happened?
let me explain, okay? Hey, what's up, you guys? So I'm editing this video, and I just realized that the audio really sucks in this episode because every single, or not every single second, but like every 2 minutes, there's a truck that passes by outside my window, and it's like 30 degrees in my room, so I can't keep the windows closed, or else I'll just boil to death. But yeah, I really apologize for the audio in this. You're just gonna have to put up with it. I'm too lazy to reshoot the entire episode. It is what it is. Yeah, I think you'll still enjoy the video though. It's a great video. So yeah, anyways, thank you for your understanding. Okay, so first let me explain my hypothesis. So my hypothesis is that the market will go up from now until the end of the year, and perhaps even beyond that, but let's just say till the end of the year. So keep in mind, this is not me saying that I believe the market will trend up every single day. Obviously, that's not going to happen, right? It's going to bob and weave, and we're going to have ups and downs. But my prediction is that by the time December or end of December, end of the year rolls around, the S&P 500, the NASDAQ, the Dow Jones, whatever index you want to look at, it will be higher than what it is now. I know you're about to tell me 50 different reasons why the economy is in imminent danger. Yeah, I know there's a lot of risk factors and a lot of uncertainty still out there with the Russia-Ukraine crisis, still no end in sight, the Fed still on a path of hiking rates rather than easing, and the fact that the US is already in a recession, right? So I know all of those risk factors are still present, but what I have to say to that is that the market is forward looking, and that's something that you got to remember. So we're now finally getting some hints that the Fed is going to pivot to a more dovish stance. So if you listen to the Jay Powell speech last week or the week before, that's pretty much what the tone was if you read between the lines, right? So basically, in case you didn't watch the speech or you didn't see the notes, basically Jay Powell said, we're going to take a more measured approach before we hike rates. We're going to be data driven. It's a lot more dovish than what he was saying before, which is, we're going to hike rates, we're going to hike rates, we're going to hike rates. Now he's going to be like, we'll have to wait and see, right? So I do believe that inflation has already peaked. And this is another key component of my hypothesis. So we'll get confirmation of that when the CPI data comes out on August 10th. But even not knowing what it's going to be right now, I think that if you just went to the gas stations, you'll find that the prices for gas are a lot lower than what they were back in June, right? So if you look at the commodity prices, like for oil itself, like petroleum oil, and if you look at stuff like, I don't know, corn, lumber, wheat, stuff like that, they're all coming down in price. So those are the big drivers of inflation, right? If you have raw materials and commodities increase in price, and those prices are starting to come down, which I think you'll see that reflected in the CPI on the next print on August 10th, and then also beyond in future months, right? So you'll find that the stock market is beginning to price these things in, and when they do, stocks tend to go up, which is exactly what they've been doing for the past few days, for the past week or so, which, at first it doesn't seem like it makes a lot of sense, right? Because you're thinking, oh, we're entering into a deep recession, we're there's the crisis with Ukraine and Russia is still not resolved, and then now there's a new crisis with China and Taiwan and the US getting into more standoff-ish, more conflicts, right, or potential conflicts. But again, I have to say the market is forward looking, right? So it's looking past all of that, and it's looking at a time, at a future where 6 months to a year from now, things are going to start to look up. So if you look at the past few decades, usually the stock market does bottom when inflation peaks. So because of all those reasons, I do believe that the big crash that we saw back in June, it is indeed the bottom, and we'll see some volatility for sure. But I don't think that we're gonna have another bottom. I don't know. That's just a hypothesis. It could be wrong. If we do, it's not going to go that much lower than what the bottom is back in June, and we're probably going to put in that bottom if we haven't bottomed already. If it starts to go back down, we're going to put in a bottom soon, right? So anyways, that's just my hypothesis though. Again, I don't believe that another bottom will happen. I do believe that the bottom is in. So I spent the past few months grounding up as much cash whenever I can. Yeah, shortly I will have around $10,000 to deploy in the market. Now, here comes the fun part, okay? So the responsible investor in me says, oh, why don't I just pick 10 different stocks and put $1,000 into each, right? Put 10% into each, or I just buy an ETF or just be done with it if I'm gonna bet that the market is gonna go up, right? But I'm not gonna do either of those things, and I'll tell you why. I believe it's during times like these when you really need to concentrate on positions that you really believe in, on companies that you've researched well or investments that you've researched well, as opposed to diversifying into a bunch of random lower performing stocks. This is because when you have a concentrated position and you really hit a big rally, that's when you really make the big bucks. All right, provided that you concentrate your position into a stock that does well, and this is where your research and your conviction, and that's where that comes in, right? It's just for an example. So it's better, for example, to be in Amazon stock or Google stock individually rather than be an S&P 500 index fund when we hit a big rally, assuming that the market is going to go back up. And it's because, once again, the S&P 500 is a mixture of a whole bunch of different growth and value names, whereas something like an Amazon would have a lot higher growth rates on average and outperform the index during like a bull market or a big rally. So another reason why I want to concentrate this play is because I just don't have the time, and I don't have the time and effort to waste my time looking at 10 different investments, right? So I just want to focus on one thing, I'm just gonna pick one stock and dump my entire 10K into it. So that's kind of the YOLO part, right? But it's not really like a YOLO, like a Wall Street Bets YOLO, or at least that's what I tell myself, right? Because in my opinion, I will do a lot of research on this one particular investment and do my research before putting my money in, right? So putting all your eggs in one basket, but watching that basket very closely. Now, let me go through some of the criteria of this YOLO play. So usually I go into stocks with the mindset that I'm going to hold that stock for 5 years. Now this might not actually be the case. I might not actually hold the stock for 5 years or 10 years or whatever, right? But this time I'm only going to hold it for 6 months, or that's the plan of holding. That's the holding period plan going into it. So whenever I have a plan on holding a stock for X amount of time, again, I might not actually follow through with that plan, but it's important to actually still have a plan, right? So I think it was a quote from former President Eisenhower, who said, "No plan survives contact with the enemy, but it's still important to have a plan." I think it was Eisenhower. It might have been someone else. Correct me if I'm wrong, but there is some quote from a war hero somewhere about that. Anyways. That's the first thing, the target period is 6 months rather than 5 years or 10 years like I usually do, and I want to realize profits before the end of the year because I do have some other projects I want to spend money on, and I got to pay back some debts, and it's just I don't want to get into it too much, but I do plan on realizing the profit from this investment in 6 months. Next, I'm strictly going to do shares and not options. And this is just in case things go south, I don't lose my entire 10K, right? I'm not ballsy enough to YOLO 10K on call options, Wall Street Bet style, even though I would love to maybe one day once I'm rich enough and I don't care about losing 10K, but I'm not at that level yet. If I buy a stock rather than an option, if I buy an option, there's an expiry date, right? If I buy a stock and it just goes south and it just goes down, I can just hold. So I won't be picking any random no-name stock, by the way. That's like the second thing that I wanted to talk about. The potential gains from penny stocks could be mind-boggling, but the risk is just too high, right? So I'm not interested in buying like 10K's worth of lottery tickets. This is a stock that I really want to do a lot of research on. Next thing, it should be something that could be purchased through a TFSA. And for my American friends who don't know what that is, it's the Canadian equivalent of a Roth IRA, right? So it's a special type of tax advantage investment account where the gains are not taxed. It would be nice to, let's say, double my money on that investment and make 10K without paying a dime of taxes on it, right? Unfortunately, this rules out buying actual Bitcoin as an option because I can't buy Bitcoin itself through a TFSA. Although there are Bitcoin ETFs, but I'll talk about those later. Now, the big question, or the $10,000 question is, I've talked about this all this time, but which stock am I going to pick? I haven't decided. So apologies if that was an anticlimactic answer, but I have, however, compiled a short list, and I think it would be great to potentially get some input from you, right? So in case you want to recommend something that you like out of this short list, please leave your comment down below, and I'll make sure you also, if you have time, justify your choice, right? Like if you like one option more than another, tell me why, right? So I'll present the choices and then I'll toss the question to you, and then no guarantees I'll actually do what the audience says. I'm just trying to get some feedback, but I'll still make the decision for myself, obviously, but it'd be nice to get some input from you. So my choices are choice number 1, Tesla, choice number 2, Google, choice number 3, Amazon, choice number 4, Shopify, and choice number 5, HUD-8 mining. So if you had 10K to invest, which one would you pick if you could only pick one? So for the rest of this video, I'm going to go through a brief kind of synopsis or brief thesis on why I think it's a good idea to go into these stocks now, and why I think these stocks will perform well over the next 6 months. It's impossible for me to know which one will have the highest return over the next 6 months because I can't predict the future. But I'll just present to you a series of my justifications and my reasons, and let you know and let you make the choice. Right. So option number 1, Tesla. Obviously, Tesla is a great company. I don't think I have to mention too much about it because I've talked about Tesla relentlessly on this channel. Obviously, they're the biggest electric car maker, and it's also like you're getting a free advanced AI startup, right? Because Elon Musk is doing his Project Optimus, which is a robotics project, and that's actually a part of Tesla. So instead of making a new company and doing a new startup, you can just buy Tesla stock and get access to their robot business, which I think is going to be huge down the line. But right now, obviously, it's still too early in the development for it to yield any profits. But that's one thing that Tesla has going for them down the line. But within the next 6 months, though, I do think that they're going to continue to ramp up their factories, and they're going to try to get the Cybertruck assembly line going and stuff like that. So I think the Cybertruck is going to be a real killer of a product. That's going to be coming soon. So that's choice number 1. Choice number 2 is Google. Again, not that much I have to say about Google. The search engine, they have the most market share in the world. Pretty much everyone uses Google except for China. But anywhere outside China, Google is probably the main search engine of choice for everybody. And Google is it's a profit machine too. So they have so many different aspects they're working on. And actually, I say Google, but it's actually Alphabet, right? So Alphabet is a parent company that owns Google, and Alphabet also owns a lot of other different subsidiaries other than Google, like the search engine and the Android division and whatnot, right? So I think that the stock is kind of also pretty undervalued right now because tech has been beaten down. I think it's probably a good time to buy into Google. Not financial advice, but I think, yeah, for me personally, I would feel comfortable buying Google at this point. Same thing with choice number three, Amazon. I think Amazon's also been beaten down because big tech is not doing well, but Amazon is still a profit machine. And I think if you read the latest earnings report from Amazon, they predict that the next quarter they're going to make up to $130 billion of revenue just in one quarter. That's absolutely insane, right? I know you're going to say, oh, well, like, most of that's like cost of goods sold because they're like selling stuff from their warehouse and stuff like that, and like the margin on the warehouse is kind of low. I get it, but like still $130 billion worth of revenue, that's a massive amount of business that they're doing, right? So Amazon is just an absolute giant, and I don't think they're going anywhere anytime fast, right? So yeah, I think Amazon is going to do very well over the medium to long term. Next choice, Shopify. Shopify, kind of the same deal. Shopify is actually, I think, one of the ones besides the next one, HUD 8, but out of all the big techs, Shopify is the one that's fallen the most percentage-wise. And it's just because they had a huge boost during the pandemic times where everyone was starting their own e-commerce stores. Everyone was doing their own online business. And then now I think during the great reopening, people are moving back to brick and mortar stores. But that doesn't mean that e-commerce is dead, right? Some people who switched to e-commerce during the pandemic times, they're probably not switching back because for whatever reason before they were afraid of like new technology, or they just weren't willing to take that risk, but the pandemic forced them to switch their business model online, and then a lot of them, I would imagine, would discover that, hey, online is actually better, I'm going to stick with online rather than move back to brick and mortar. Some will of course move back to brick and mortar, but I think some people will have stayed, right? So overall though, my point is that Shopify is still growing, and e-commerce as a whole is still growing, and I think that the size of the pie is just going to get bigger and bigger in the future. So if you're asking, am I worried about Shopify now that the stock has fallen, like 70-80% from the peak? I'm not worried, just because I think that the pie is going to get bigger for e-commerce, and Shopify is one of the market leaders in e-commerce, along with Amazon, right? So I kind of see Amazon and Shopify as sort of similar, but with two different business models, right? So Amazon's method is sort of like the Apple vertical integration method, where if you want to set up a store, you have to go through me and I'll take a cut of your profits, versus Shopify really gives you the tool, kind of like the Microsoft approach, right? Where they just give you the tools and they let you customize and like run whatever the stuff you are on it. It's more like a Windows operating system rather than like Apple's like streamlined vertical integration, right? So Shopify is more horizontal integration. So I think that both Amazon and Shopify could be big winners in this space, and I'm really excited for Shopify's future. So that's choice number 4. Choice number 5 is HUD 8, and I know I said I'm not going to buy Bitcoin with it, but HUD 8 is a Bitcoin miner, which is kind of similar. It's of course correlated with Bitcoin, so it's kind of like, in a way, I'm investing in Bitcoin with HUD 8, and the reason why you'd want to maybe buy HUD 8 as a mining company rather than buying Bitcoin itself is because it's more like the picks and shovels business, right? So think of like a gold mine, right? So you can buy gold itself, or you can buy the company that sells pick and shovels. So I think that HUD 8 has like a really great thing going for them, because I've seen a lot of miners being forced to sell down their balance sheet of Bitcoin because they need to pay for the electricity, right? Because their mining operations are no longer profitable, or they're like on the verge of profitability, but they want to like sell some Bitcoin just to have more cash on hand. Well, HUD 8 hasn't actually done that, at least yet. So if anything, they've actually added to the amount of Bitcoin that they have on their balance sheet, which means that they're generating enough income, or they have enough cash to pay for the electricity that they're using, where they don't need to sell a bunch of Bitcoin to keep their operation going. So yeah, I think that HUD 8 is better positioned to weather this crypto bear market better than a lot of other companies in this space. So I think that, yeah, Hut 8 is one of the best Bitcoin miners out there. And yeah, if I'm gonna make a big bet on Bitcoin, I figure, you know, it's in between whether or not I do a Bitcoin miner like Hut 8 or I just buy a Bitcoin ETF, like, because we have those in Canada, unlike the US. Sorry, Americans. But yeah, I was debating on whether to buy an ETF, Bitcoin ETF or Hut 8. And I think that, you know, if I'm going to make a bet on Bitcoin anyways, the Bitcoin miners actually, their like percentage movements is more volatile than Bitcoin itself. So it's almost like a leverage bet on Bitcoin, because you're betting not just on Bitcoin itself, but you're betting on that specific company's operations, which comes with more risk, but with more risk comes with more potential rewards. So if Bitcoin, let's say, doubles, then Hut 8 will probably most likely more than double. They'll like triple or quadruple. And that's usually just how the cookie crumbles, right? So I think that you know, if Bitcoin does end up doubling by the end of the year, which is very possible, I'm not saying that it will, again, not financial advice, but if it does, then I think that there's quite a bit of profit to be made on Hut 8 stock. And, you know, if I was ballsy, I'd play Hut 8 options, but I'm not that ballsy. But, you know, maybe a little bit down the line when I get more cash stacked up, but whatever, right? So anyways, those are my 5 choices. And yeah, that's it for this video. Let me toss the question to you. Which one of those 5 choices do you like the best? If you could only pick one. So only pick one, right? Don't cheat and don't be like, you know, I'm going to pick all 5 or I'm going to pick 3 out of the 5. Just pick one, right? If you could only pick one. So I'll leave the video here. Be sure to give this video a like if you enjoyed the video, and consider subscribing if you like the series. Be sure to follow me on Twitter and Instagram. Links down below in the description, as always. And with that being said, I'll see you in the next video. Bye-bye.